Now, like all Pacific Island states, Fiji is highly vulnerable to climate change. Rising sea levels threaten to swamp the country's 300 low-lying islands. To tackle this, Fiji has become the first country in the Pacific and the first emerging economy to issue a sovereign green bond. Now, the government says the participation rate by banks and investment funds has been overwhelming. After a week-long tender, it managed to raise more than $42 million, more than double its initial estimate. It says proceeds of the green bonds will fund environmental projects. Fiji plans to power itself with 100% renewable energy and reduce its carbon footprint by 30% by 2030. Since the 2015 Paris Climate Agreement, the market for green bonds has grown rapidly. Analysts expect it to reach more than $130 billion this year. That's a 36% increase from 2016. So for more on this, I'm joined by Justine Leigh-Bell from London. She's the Director of Market Development at the Climate Bonds Initiative organisation. Welcome to the show, Justine. Great to have you with us. Tell us, firstly, a little bit more about your organisation and what it does.
Yeah, Climate Bonds is a global organisation. It's based here in London and with offices in Shanghai, Delhi, New York, and also Sao Paulo. And the core focus of the business is very much to drive the development of the green bonds market, which we've been at the forefront since really the beginning of 2012, where we had roughly about $3 billion of issuance at that time. And now, as you've highlighted, we're now outstanding to over $200 billion. So the organization serves as a catalyst to driving development, and our key stakeholders are investors. So it's really creating awareness to the institutional investor on the opportunity of green bonds and what that can do for their portfolios.
Interesting. I'm curious, Justine, so how much of the money raised by issuing green bonds goes directly to the projects that they're supposed to fund, and how much of it is used for other purposes, for funding administrative costs, for example?
Well, I mean, this really is the fundamental component of what green bonds are really standing for. 100% of the proceeds are being used to finance environmental projects and assets, let's say, many of them delivering on a climate change solution. But let's be real. I mean, what we're not talking about is niche projects in the sub-Saharan part of Africa. What we're talking about is large-scale infrastructure projects that are touching on every major sector of our global economy. So energy, land use, water, energy efficiency, transport, and so on. So it's big, large-scale infrastructure planning and attracting institutional capital to be able to address those challenges. It's infrastructure that is going to be fundamentally different to what we've been traditionally doing, which has been on a high carbon growth trajectory. We're now looking at the future. And if you recall recently with the whole growth around electric vehicles and implementation and targets put forward, that's just a clear example. So going back to your question, 100% proceeds are being used on eligible projects and assets. And administrative costs, look, what you're looking at is the transparency and disclosure element of these products, which is another thing that's really exciting investors. They know exactly where their money's going. And the issuers themselves, those that are issuing the bonds, are reporting on that. The commitment to be reporting on the management of those proceeds and ensuring they are still financing the projects and assets that they committed to on the issuance of the bond.
Right. I want to flip this around now and look at it from an investor's point of view. What sort of returns can investors expect from green bonds, and how do these compare with more conventional types of debt issuance?
Well, again, I mean, you know, the international debt capital markets right now are doing exceptionally well, right? And what we know is that investors are on the hunt for good quality product. And green bonds are no different than any regular vanilla bond. Majority are investment grade products, so they're still same risk reward profile that you would get with any regular bond. The only difference is that they're getting a green bonus feature to their bond. And that's why investors are really attracted to this product, and that's why you've seen an exceptional growth in the last 4 years, jumping from 3 billion to 200 billion outstanding in such a short period of time. Coming back to the Fiji sorry.
Yeah,
go ahead.
sorry. One question. The US and Europe have led the way in the issuance of green bonds, but are you seeing more demand coming from emerging economies to raise capital this way?
Yeah, I mean, that's true. Very much led by the developed markets, as we would expect. But now the big story is the emerging markets. This is where the excitement really begins. And have an example like Fiji come and set really what is an example to be had on governments taking leadership on this agenda. All, of course, in lead up to the climate discussions that will be happening in Bonn in a couple of weeks. But the opportunity we have begun to see has come out of LATAM. I mean, Brazil alone has issued close to $4 billion now. We've seen Mexico, Colombia, Argentina has also come on board. And then we've also seen China and India. I mean, China has taken exceptional leadership with one of the largest issuer of green bonds globally. So this is no longer just a developed market story. This is a global story for sure.
Justine Leigh-Bell, thank you very much indeed. Story we're going to be tracking quite closely, I'm sure.